Hey, I'm Dart.
I'm Lisa.
Hey, how's it going today? It's good to be Friday.
Happy Friday.
All right.
And we've got work to do.
That's right.
Yes, after this.
Right.
So,
Yeah. All right.
well, today we're going to sum up. Instead of just a summation, we're going to dive a little bit deeper and into that last tax bucket.
Right.
And
Tax free.
yeah, and I think it's important because there are definitely ways to think about this and to look at some of these in a different light. There we go. Let's pop that up and look at that.
All right. So let's jump right into this. On the far right, we have Social Security. And whenever you start taking Social Security, all the rules change. All right. So we're going to kind of not get too.
Here we go with the rules again, Dart.
Right. Yeah. So, but Social Security is actually tax advantaged because if you're not earning taxable income, it can be all tax free. And so we're not going to get into the limits and all that kind of stuff today. But whenever, so for instance, to the left here of Social Security is municipal bonds. And so there's no federal tax on municipal bonds unless you're taking Social Security, right?
Yes.
And so kind of let me tell you, I had a 60-year-old client and he had plenty of cash, plenty of IRAs, 401k stuff, plenty of Roth, he used a section 7702. So it made sense because for him to wait until age 70 to take his Social Security, but he wanted to start spending his retirement money or using his retirement accounts at age 60. So we put together a plan to start taking money out of his IRA, and it's taxable, but we were staying in the lowest tax bracket. We diversified some money into some municipal bonds, and he was getting an income of 5-6% off of that, and that was tax free because he wasn't taking a Social Security. And then we were letting his 7702, his life insurance, continue to grow and compound and just get larger and larger. We weren't taking anything out of that. And so then we waited and so for 10 years, we kind of lived off of the taxable IRA and the municipal bonds to control the tax bracket, to keep him in the lowest tax bracket. So when he gets 70 and goes on Social Security, now we get out of the municipal bonds, we invest in something else. And we're so that we can stay.
And his Social Security was higher.
And that's right. His Social Security is higher and locked in, so that when he passed away, his wife would get more higher Social Security.
Which I think just makes good points for why planning is important.
That's right. That's right.
Yes.
Versus taking the Social Security at age 62 is fast, and you'll end up paying more taxes because it limits you on the income that you can make. And so now when we're able to turn on there's the cool thing about, municipal bonds, you track it on your Social Security, on your tax return.
Right.
And it's not taxed if you're not taking Social Security. But if you are taking Social Security, then that number means something. Yes. Also, the Roth 401ks and the Roth IRAs, when you take distribution, it's tracked. But today, and the rules are that it's not taxed, it's not taxable. So that's great. Guess what? In the section 7702, there is no place to put that distribution on the tax form.
Yes.
So from a planning,
I feel like people are like, yes.
Yeah. So from a planning aspect, taking money out from a 7702 plan.
Account.
While you're on Social Security and there's no place, so it keeps your Social Security tax free.
Yes.
It keeps and you can control your cash flow and that's going to be determined how well you planned in your 40s and 50s and to add to the 7702.
Yes. So Dart, thank you for just buzzing through all of that.
Right.
I feel like you get fired up talking about this. Yeah. And I think, no, it's great because it just lends to the fact of, once again, plan. Just don't wait until you're retired and say, oh, what can I do now? What can I do now?
And we'll talk about this, but it's like we should live in an and world. Unfortunately, our financial industry, people get used to doing one thing, and it's either what they do or nothing, or what they, it's like, you ask them, should I do a Roth or an IRA? Well, you can do both. it should be an and, because we want the and to serve you, to serve your purpose, to help you reach your goals and desires.
Right. So I feel like, just in our talks this week, I hope that you all walk away with thinking a little deeper about this, and thinking about, all of these buckets are important, and thinking about your own life, and see, I keep using and,
Right.
and asking yourself, am I in all of these buckets? Am I setting myself up for success for today and for retirement?
Right. Absolutely.
I like that and word, Dart.
Yeah.
What else did you want to add to sum that up, Dart?
Y'all have a great weekend.
Oh, was that it?
That's it.
Okay, well, we'll be working hard this weekend.